What a week of trading it's been. We started with the Dow Industrials dropping almost 1,100 points on Monday before recovering with a 600-point gain on Wednesday and a nearly 400-point jump on Thursday. That's the Dow's biggest two-day increase ever. For more on the unprecedented volatility seen across the markets, I'm joined by Craig Erlam, a senior market analyst from Oanda, with me now from London. And Craig, what do you make of the volatility? I mean, if you're still sitting on the sidelines and didn't buy on the dip this week, is it still too late, or do you think there's more upside ahead?
Well, I think obviously we've seen stock markets recover most of their gains, which we saw from earlier on this week. They're still seeing a lot of volatility in the markets. I think there's still a lot more to come. I think these concerns over China, the worries of the slowdown, the volatility in Chinese markets, the interventions from the People's Bank of China, which is creating really so much of this volatility right now. I think that's still more to come. And really, as long as these worries about China persist, then there's going to be volatility that's going to spill over into global markets as a whole.
All right, when do you think that volatility will subside? I mean, what do we need to see happen for the markets to calm down?
Well, I think one of the things we could see for the markets to finally calm down would be that Fed rate hike. People are so concerned about it. It's all people have been talking about for almost a year. And I think really what we actually need is to get it out the way. The Fed's made it perfectly clear that the first rate hike doesn't mean that we're going to see a second and a third within 3 to 6 months. We just need to get that first one out the way, and people can stop being so concerned about it and start focusing on the path of rates thereafter. And I think the path of rates after the first one is going to be relatively slow, as the Fed's already mentioned. The other thing we really need to see is we need to see markets find their true value, and of course when we've got so much monetary stimulus from the central banks, the true value is going to be a little bit disputable. But now that we've seen such a significant pullback in China, we saw the 10% correction in the S&P and the Dow. I think people are starting to feel more comfortable with valuations, and now that we're starting to see this point, maybe people will start to feel a little bit more confident again.
All right, we'll talk more about the Fed in a moment, but first, I mean, where do you see opportunities in this market? What stocks are of interest at the moment to you?
Well, obviously that depends on a little bit on risk appetite. I think if I'm looking at the longer term, I do think while rates are probably going to rise either this year or early on next, I think they're going to remain low for quite some time yet, and I think that really favours housing stocks. Or if you want to look a little bit away from that, I think people are really looking to improve their houses at the moment, so we can get that kind of resale value. So places like Home Depot, I think, offer a fair bit of value still right now, even though of course we have seen them the stock rally over the past few months. Things like banks as well always benefit from rising interest rates because the interest margins improve. Likes of JP Morgan, I think, while again they have recovered from the losses which they made earlier on this week, I think they do offer plenty of value again. They're one of the few areas that really do benefit, as I said earlier, from rising interest rates. And another stock that I think is going to be quite interesting in the next few weeks because of the releases which are to come is Apple. Now again, there's nothing to say that we're necessarily going to see it push higher. We've potentially, from a technical standpoint, seen the death cross in the Apple stock, which is the 50-day moving average crossing below the 200. So that's concerned investors to an extent. So I think a lot in Apple hinges on the release of the iPhone next month, and quite often we can see the stock push on from there if people are impressed.
All right, and Craig, just very quickly, what do you think we're going to hear at Jackson Hole, that Fed retreat this weekend?
Well, I don't think we're going to get too much. I think people are really going to focus on the finer details as we've seen over the past couple of days. Janet Yellen isn't speaking, so I don't think we're going to get that big hint in respect to rate hikes. But what we need to see is this China situation going to have a negative impact? And I don't think it is, and therefore it could be a little bit hawkish for the markets.
All right, Craig, we'll leave it there. Craig Erlam, a senior market analyst with Oanda. Thanks very much for joining us.
Thank you.
I'm Scott Gamm, and you're watching The Street.